Hello, and welcome to a special episode of the ICAEW Insights In Focus podcast. I'm Paul Aplin. I'm a former president of ICAEW and currently a member of the Tax Faculty Board. I also sit on HMRC's Admin Burdens Advisory Board and on the CFE Tax Technology Committee. The UK's first electronic tax return was filed way back in 1997, an event I remember well as I filed it. Over the quarter century that's followed, we've seen technology transform tax administration. From the way we prepare computations, to the way we file returns and forms, to the way HMRC receives and handles data. Some things have worked well, some extremely well, others less so. But the change in the way we do tax has been little short of a revolution. It's a revolution that's been transforming tax administration not just in the UK, but around the world. And its pace and scale is increasing, moving beyond the digitalisation of tax returns and forms into whole new ways of handling and making use of data. Today we'll be looking at some of the ways in which HMRC is using digital technology. Not MTD, which tends to dominate any and every current discussion on tax technology, but at some of the other things we should know about and be anticipating. Joining me to do that are two people from HMRC I regularly discuss these issues with. Rowland, Director General of Transformation, and Jonathan Athow, Director General of Customer Strategy and Tax Design. They both sit on HMRC's Executive Committee, and they both share my enthusiasm for digitalisation of tax administration. Jonathan, thanks for joining us.
Great to be here with you.
Likewise, hi.
Jo, can I start the ball rolling by putting a question to you? I said that most of what we hear currently about digitalisation in the UK is focused on MTD, perhaps naturally. But what we hear is almost exclusively about the, if I can call it this, front of house side of MTD, about MTD compliant software and quarterly returns. What I'm interested in this morning is what's happening back of house. There have been concerns, which I naturally share, about data not being joined up across different HMRC systems. An example would be self-assessment and the CGT property returns. So could you tell us something about how replatforming data for MTD is going to help you join up data internally more effectively?
It's interesting you start with 1997 as our first step into digitisation. And in that quarter of a century, we have put a lot of technology in. There's a lot of databases. And a quarter of a century old, a lot of it is in need of replacement. So you're absolutely right to say there is an enormous amount of transformation that isn't visible to our customers or the outside world, but actually is fundamental to transforming to a digital tax system. So some of the things we are doing there, not only are we upgrading to modern cloud-based platforms, they have the agility to be more responsive, to compute in real time rather than in batches of data, but they are also more resilient and flexible. But it's also what we hold in those platforms that needs the transformation. The way we hold our data, the way we protect our data in this world of increasing threat, but also the way we link our data so that we do get that complete picture of a customer and are able to support them holistically rather than tax regime by tax regime. All of that equals our transformation, not just the front-end digital services, as you said.
So this is really about moving away from having HMRC's data in pots that relate to specific taxes and more about having data held in a way that's centred on the taxpayer. So perhaps we can look at a more personalised experience or service going forward.
That's exactly the ambition. We want a taxpayer to have all their information at their fingertips, and we want to use that to help them to manage their tax affairs more easily, whether it's through their agent or directly themselves. So, for example, most of the tax system is on a calendar base. Wouldn't it be wonderful if not only is all the information available at your fingertips online, but also that online service is supporting you to know what you need to do at that point in the year, whether there is something that's changed, whether there's something that you might want to look at and just check that it's correct. So I think we can be far more supportive with our customers in a way that just isn't possible on a telephony-based or one-to-one system.
And I know one of the vehicles that you're looking at to deliver this more personalised service is the idea of the single customer record and the single customer account. One of the things that really interests me about that possibility is how far you can go with pre-populating data into the single customer account. So we have the opportunity to turn the tax system on its head from I as a taxpayer send you as HMRC my tax return with data on it to a system where maybe you can pre-populate more and more sections of my tax return. So I just need to look at it and decide whether or not it's right. That seems to me to be turning the whole thing on its head to something that's potentially more proactive. But how far do you think you can go in pre-populating data? How many different data sources do you think you could obtain?
The possibilities are infinite. The amount of data there is now available on electronic means that there is a wealth of opportunity available to us to help the customer pre-populate, understand their tax affairs. However, there is some caution here. Not all data is as accurate as it would need to be. Some data sources have a caveat about how they're collected, and therefore we need to make sure that whilst we're exploring this wealth of opportunity, we've got a really, really conscious eye on the provenance of that data, because the one thing we cannot compromise on is quality, because that could make it more confusing for the customer than helpful. But we are so excited that the tax system has this possibility, and it's something that we are actively exploring every day. Most recently, we've linked up with open banking, so we are sharing data between ourselves and bank accounts to make it much easier to pay your self-assessment bill, as I did mine only a few weeks ago, and it was literally 2 clicks on my iPhone and my bill was paid.
One thing I've read about HMRC's use of open banking is that you found it much easier to allocate payments to the right account. In fact, I've read, I think, that you're finding that open banking allocates tax payments with almost 100% accuracy. Is that right?
Yeah, we're really pleased with the results of open banking and its possibilities, because it's coming from the account that needs to be paid and it's pushed out to a communication direct to the bank. It is far more accurate, and it's reduced any scope for human error, computation error, etc. And that's exactly what we need to do more and more of in the banking, not just the banking system, the tax system, in that we need to make sure that we are eliminating as much opportunity for small errors as possible, so that the customers can feel really, really confident that when they're transacting with us, they're getting their tax right.
If we were to get to the point where my tax return is completely pre-populated, I just log on to my HMRC app and there are the details of all the information you've received from third parties or that I've filed through MTD, and I look at it and I think, that's okay, I press the button, that's my tax return done. Do you think there's a risk that you could end up making it so easy for the taxpayer that actually I don't bother really checking that data? I just press the button. Where do you think the responsibility then lies for just getting that decision, this return is correct? Is how much is with HMRC for pre-populating the data? How much is with me as a taxpayer for checking it rather than just thinking, yeah, it must be okay?
Jonathan will probably say more about where the policy thinking is going on this topic, because it is a very complicated topic. I mean, our design principle is that the customer is still required to be involved in their tax affairs. This cannot be always automated. It's a bit like your bank account. Many people do not check their bank account thoroughly, and therefore are not always aware if something has gone wrong. A transaction's come in incorrectly, or a piece of third-party data has come in and it needs rectifying. So just as banks recommend that all customers check their bank statements thoroughly, we are very much in that position regarding your tax affairs, and taking an interest is the easiest way particularly as we rely on more and more third-party data. So, for example, in the PAYE system, it's a fantastic system. It makes tax easy for so many, but occasionally there is an error in reporting from an employer or a time lag in a piece of information. And that's when people can get a bit of pay shock in their pay packet. So we want to help make tax easy through the digital system, but also we want it easier for the customers to converse with their tax affairs, to understand them, and therefore have a much greater eye on making sure it's correct.
Jonathan, thinking back over how things have changed over the 25 years, it's not just tax technology, it's not just the way we file returns. A lot of things in society have changed and the way we do business has changed. Around 15% of adults operate through platforms. And I wonder if I could just take one example and ask you how you think digitalisation could help the individual. Take the fast food delivery rider. Maybe English not a first language for some, maybe low income for many, and maybe a nervousness about dealing with authority because in the past they've been on PAYE and haven't had to. Suddenly, they're, perhaps I can use the term, accidental taxpayers, but they still have an obligation to file a return. Do you think there's any scope for technology to help people like that to comply with their obligations in a lighter touch way?
There's a few points I would bring to bear on this. Firstly, we've always had low-income taxpayers who've needed to interact with us in one way or another. So, our customer base is very broad. And if you went back to 1997, there would have been lots of minicab drivers and things like that well before we had platforms and those sorts of issues. So it's really a question now, I think, of scale and how ubiquitous some of these platforms are. And actually, the technology underpinning those platforms is actually, in many ways, an opportunity for us, because those platforms, every time a job is done, every time a fast food takeaway is delivered, that's recorded on the platform's system. So actually it creates an opportunity for us to access that data, and there are different ways we can use that data. Joe's already talked about pre-population and whether you would want to go that far, but it can also be used for us to maybe nudge people if we think there are missing parts of their tax affairs. So there's a real opportunity. The data collected by these platforms themselves becomes very valuable, and there's work now across the OECD to put in place a framework for sharing that data so we can get access to it and use it to help people to pay the right amount of tax.
An idea that really struck me as being potentially transformational was one I came across in the Russian tax system, where small entrepreneurs can now have a tax authority app on their mobile phone. If they make a sale, they can generate the invoice on their mobile phone, they can transmit that to their customer can pay them electronically. But a record of that invoice automatically goes to the tax authority, which calculates the tax and pops that figure back to the entrepreneur. Now, what really struck me about that is we think of income tax, the tax that self-employed people pay, as an annual tax because it's always been based on a set of accounts. But what they're doing in Russia there almost seems to be changing that annual basis of assessment for income tax into a transactional tax. Do you think that idea of moving, and perhaps this is only something that would work for smaller businesses, do you think that idea of moving from an annual tax to a transactional tax with income tax is something that could ever work here?
In some ways, we already have features of that through the PAYE system that we collect. We have a system that calculates tax in year and then collects that at each pay period. And then there's a reconciliation at the end of the year. So I think these sort of hybrid models are perfectly possible to have. I think there are good reasons for sort of keeping tax systems on an annual basis, even if you want to have more regular data. And more regular data is very important for a tax administration. And I do think there are sort of wider benefits sometimes to these ideas of collecting tax in the transaction. And if you just allow me to expand on that a little bit.
Oh, please do.
So there's sort of a number of stages that a tax authority is really interested in. So we're interested in data when the transaction arrives. The longer the gap between the transaction and having data on that transaction, the more chance there is that somebody forgets it or records are not kept or not kept well. Even better is, can we get payment close to the transaction, because that avoids the build-up of debt, and debt can sometimes not be collected, so that avoids that problem. Having a third party is always a good thing for a tax administration. We're not relying simply on the taxpayer, but we can rely on somebody else to provide that information. And even better is kind of where that money is withheld before it gets to the taxpayer, so we get the money. That really reduces the opportunity for money to not find us. So the things you talked about there are the characteristics we would look for. Exactly how you would apply it, I think, is very different according to the tax system you're in, according to the technology you have available. But actually, that's beneficial for us, but sometimes it will be beneficial for the taxpayer as well. People are thinking about how they are managing their cash flow, and actually for them there might be a benefit in paying us as they're going, so they don't end up with a large bill at the end of the year they will then have to pay. So there are lots of opportunities here, and lots of the areas we're going into thinking about, it takes us into that sort of territory. And even things like open banking as well, the more you can think about that data, the more you can think about kind of where you collect the information, where you collect the tax. There's lots and lots of opportunities here. Financial technology is changing, and we need to be keeping up to speed with that and thinking about what the opportunities are.
If I could just pick up on 2 points from the last couple of things we've discussed, Jonathan. One is this almost irresistible move. I hesitated on saying almost. I think it is an irresistible move to more real-time data, to recording transactions closer to real time, to improve their accuracy, but also, I think, as you've rightly said, to give businesses better, more accurate real-time data so they can take better decisions. That, I think, is really important. And another point you made, thinking back to the delivery driver, was the opportunity to put prompts and nudges into tax compliance software. And for me, I think that's one of the really big opportunities. That is one of the things that could help people see the tax system helping them rather than try to catch them out, just that little nudge. And one thing that came up in a Q&A session I was doing recently was a question about, if a business misses the fact they should have registered for VAT, who's responsible, the business or their accountant or bookkeeper? But actually, the question in my mind wasn't who was responsible. It was, couldn't you actually put a very simple tool into accounting and bookkeeping software that just keeps track of your sales? And if you're not VAT registered, gives you a prompt as you're approaching the point. And what really shocked me was very, very, very few products actually have that very simple prompt built in. And I'm sure there are more things we could think about that would be really helpful. And maybe if we had another hour to talk about it, we could think about the new penalty point system and how big a role there could be for technology in helping taxpayers navigate that. And actually, as that's so interesting, do you think there's a role for technology in helping people to navigate the new penalty system?
I think that we've only really scratched the surface, I think, with the use of technology, either technology provided by HMRC, and we've got a wide range of offers now. We've got the HMRC app on people's phones, which again provides data in one place. There's no reason why we can't use some of the functionality of phones now with reminders and those sorts of things, and sort of build those into the app. So there are lots of opportunities with the technology we have, but also with the other technology people use. And I think we've only really scratched the surface of how we build our relationships with the software industry and think about the opportunities there. So I think there's a real, of course, accounting software and tax preparation software has been around for a long time, But I think there's a real opportunity now through some of the things that Joe talked about in terms of bringing data together, looking at taxpayers' affairs in the round. It would be good if we could have that sort of, here are the things you are likely to need to do over the next 12 months. In 3 months you need to file this. In 6 months you need to do that. Much clearer for people to help them understand where they're complying. Give them a nudge when they get close to thresholds that mean they might have to do something different. So I think there's lots of opportunities there. There's a question of how much we build it ourselves, and how much we look for the software industry to do that. But I think it's a really rich vein. The challenge, and again, is making certain, and it's the one you touched on, your analogy of the car, is making certain we don't create an impression that taxpayers can simply rely on these things. They will need to check, they will need to make certain and take responsibility for their tax affairs. So we'll need to get that balance right in terms of how we get those prompts and nudges to work.
I'm very conscious of time. There were two areas I just wanted to touch on before we do have to finish, although I think the three of us could probably talk all day on this topic. One, we've looked at how we tax. I think over the next few years, certainly over the next quarter century, we're also going to be looking more at what we tax. And one big change we're going to see is the shift from petrol and diesel cars to electric. So petrol and diesel raises a lot of revenue through VAT and duty. We're going to have to think about how we tax electric vehicles. Do you see technology changing the way we do that, perhaps on a per mile travelled charge, perhaps dependent on the road we happen to be on, perhaps dependent on how busy it happens to be, or even the time of day? Is this something that HMRC is thinking about at the moment, how we might use technology in that context?
There are a number of tax bases, well, probably two main ones that I can see sort of eroding, and you need to think about what you would change. One of them is sort of tobacco, but the other one is exactly as you say, is road fuel duties. And I think there's a sort of wide range of options there around what you might want to do in its place. Do you wish to go for a per mile charge? Do you want to do something else in terms of taxing ownership or the electricity that is used to recharge electric cars? All of these sorts of things I think are being discussed out there. But technology does allow you now to do many more interesting things. GPS technology allows tracking of vehicles. We have number plate recognition. And actually a lot of that infrastructure is now being built. Many cities now have some clean air zones or those sorts of things. So people are being tracked and sometimes charged for access. So some of those technologies are already there. And again, there's a question, this is a public policy question, not really simply an HMRC question, but is kind of what do you want to achieve through your tax system? When I look at road fuel duties, yes, it's there to raise revenue, and as you say, a substantial amount of revenue, but it's also there to deal with the negative externalities, as the economists would say, of road fuel use. So you really have to think about not just where you're raising revenue, but also what are you trying to do? Are you trying to tackle congestion? Are there other things you are trying to do with any replacement that might come along for road fuel duty?
That really leads me on to what I was going to make the final point, and that is looking at the OECD's recent paper, Tax Administration 3.0, where one of the themes is moving closer to real-time data, but another is embedding compliance into taxpayers' own systems, so into their software systems, into their recording systems. And I can see huge advantages in building in some kinds of prompts and nudges, like, for example, the one we talked about on VAT. You're getting close to your VAT registration threshold, you need to take some action. That would be a positive. There are some compliance rules that would be totally uncontroversial. That would be one. There are others where perhaps HMRC's view is different to the view of a lot of tax professionals, and there's a bit of a grey area. So there are going to be questions about what rules should be embedded and how transparent they should be. And perhaps picking up on the point we've just discussed on how you raise revenues from electric vehicles, with technologies like GPS, number plate recognition, and compliance built into taxpayer systems, Do you think we need some kind of public debate on how far this goes? I can imagine some people listening to this will already be thinking, hey, this is Big Brother. But is this Big Brother trying to catch you out, or is it Big Brother trying to help you? What's your view on, and I can perhaps put this question to both of you, how do you think we should have that debate on where the balance lies between intrusive and helpful?
I think it's a really good question. And again, while we're talking about that in the world of tax, this issue of how data is used, people's attitude to use of data and sharing of data is much wider than that. It's a cross-government issue, but it's also an issue with the private sector as well. So there are lots of different elements to this. And I think the key issue, and the one I'm very keen about, is being very open and transparent about this. I think if you are going to use data, if you're going to be embedding rules in systems, I think you need to be very open and transparent about that. And you need to not rush ahead of public opinion. You need to be very, very sensitive to it. I think there are examples of poor practice in data sharing in this country and others, where you see that people have got out of step with public opinion, and that leads to lots of difficulties. So I think there is absolutely right, you need to keep having this debate, but it will constantly change as well. The technology offers you new opportunities. Things you could not have done a few years ago are now much easier to do. And just because you can do it doesn't, of course, mean you should do it. So I think there is a real need to have this constant debate about how data is used, how we are using new technology, artificial intelligence, machine learning, these new technologies, how we are using them in the tax system and how we use them more generally in society is a really important question, to make certain we get good results out of them and we don't fall into some of the traps that this technology can lead you into. And there are good examples from the Netherlands and from Australia where some of this technology has produced outcomes that really people were not looking for, really unintended consequences that have damaged trust in the system. And one of the key things for me, and a word that's really important in our vision, is that we need to be trusted. People need to trust us that the data we have on them will be protected, confidentiality of taxation will be protected, but also that we will use data in a sensible and proportionate way. So trust is a really important issue, and I think it cuts across lots of the different elements of the agenda we've talked about in terms of modernisation and technology. Making certain you have a trusted system that we are seen as trustworthy, I think, is really important.
Jo, did you want to have the last word on that one?
Jonathan has hit the nail on the head with trust. And the basis of trust is that our customers perceive our actions to be proportionate and fair. I think there is a huge amount we can be doing that is not at all controversial, because the evidence base of this is an area of the tax system that our customers find confusing, or this is an area where most mistakes are made. Simple nudges and prompts at those points are a hugely helpful thing that we can be doing whilst we're having that wider debate that Jonathan states. I think the really important thing in all of this is to keep the experience of our customer in our mind. The last thing any of us want, and we've all got websites that do it to us, is 300 emails popping up a day or your iPhone having notifications. So we need to make sure that we are using and leveraging technology to really help our customers, but we are keeping the overall experience and ultimately the aim of all of this in mind, which is to make tax easy and to help our customers get their tax right.
And to go right back to the start of this conversation, to put the taxpayer right at the centre.
Absolutely.
I guess this is the right place to wrap things up for now. Jo, Jonathan, thanks for sharing your insights and ambitions today. What's very clear from this conversation is that the next quarter century is going to be just as transformative in terms of digitalising tax administration as the last 25 years have been. And, well, who knows what tax administration is going to look like in 2048. The ICAEW Insights podcast will return later this month with regular host Philippa Lamb. And in the meantime, please rate, review and share this episode. And remember to subscribe to ICAEW Insights wherever you get your podcasts. Thanks for listening.